All right, so this is the first run of this machine learning system that I've been working on for the better part of a year with live data now. The last 2 weeks has been real-time simulation. The server's running in the background here. And then the custom study that does all the work on the SC side is right there, and the spreadsheet that does the auto trading is right there. Okay, so all this is ready to go. Our dilemma is that the volatility is very high. Now, when I first started doing this, my expectation was that when I saw real high volatility, I just wouldn't turn on my fancy schmancy machine learning system, and because that's what I do when I'm as a human, right? I just don't trade when the market is too volatile. But what I saw in continuous replay and in simulation is that the machine learning system, it's certainly able to keep up. All right, that's not the issue. The concern I had was that the data, the underlying data, or rather the relationships between the various pieces of the data that are used to make a prediction are different during volatile times, and as a result, you shouldn't be running it. That's not what I saw in replay and simulation over the last couple of weeks. I saw that what happens when it's volatile like this is you either just immediately get whacked and you're done. So you take your max loss, which in this case is on the order of $150 in the NASDAQ, 3 10-tick trades. Or much of that volatility is confined to areas where we've identified that it's ugly and should be staying out, or rather the system's identified that. Or you do actually pretty well. Okay, so the whole point of trading is that to limit your downside risk and don't limit your upside. So that's I'm gonna just let it go, because I'm expecting volatility again today with by looking at the overnight range. All right, so let's just see what happens. What's the worst case? The worst case is they'll be on the order of minus 150 down here at the end of the day. We'll see. So there's the first trade. We just went short. Or no, we're trying to go short. All right, sell limit at 84.75 and filled short. And about to get crushed. Okay, so first trade. Take the short. Yeah, I see. So you can see the little the move down, the pullback, and it predicts short right there. All right, so that was the second trade. We got in here, right there, and got 10 ticks. Stop move to entry correctly. And it comes back and gets us. So the conditions are pretty whippy right now. One of the things that we worked hard to do is stay out of the chop. And so today's kind of odd. It is volatile in that it's moving very quickly, so it's hard for the humans. I haven't quite seen the super violent reversals that we've been seeing. So it's a little deceptive from a human perspective. If when we're looking at it from this chart, it looks like okay, it's tradable. But every one of these signals, every one of these normal signals here, there's no entry unless you're willing to place a sell stop or a buy stop, which we don't normally do. All right, when you're trying to use stops this tight, you just can't do that with a 10-tick stop. It's really hard. It's really hard to survive. So system trying to get long here. The way this works is, we place a limit order 1 tick off the close of the bar, and then the system is set. It's actually SC's auto trading system is set to cancel that order if 4 bars go by before you get filled. Okay, so you've got really what I want to get filled on that next bar. But the way it's set here is cancel order if not filled in 4 bars. So we should see that order cancel just like it did. Okay, so that's a great live test of that functionality. So taking another trade there and taking a loss. And what we're talking about in the room here is that the machine is down 2 trades now, basically. There have been 2 losses and a scratch. And as a human, when that happens to you, you basically start panicking internally, whether you admit it to yourself or not. Certainly, newer traders are like, they're basically internally screaming, and you start making that starts to affect your judgment. All right, and the thing about the machine learning system is that's simply not the case. Right? It's just going to keep doing what it does. And so my choice as the human is, how much am I willing to risk? And that's, $150, and just let it go. It's going to do what it's going to do. And so there is no factor here where being up or being down has any impact on the decision that gets made. And that's the huge benefit. In replay, in simulation, I saw many cases where you get down 2, and the next trade is the one that makes up for it. Because our risk is 1/3 of our gain, when you think that through, just the math, you actually only have to be right 1/4 of the time to break even. Only 25%. Okay, if you can execute. All right, and humans, we can't. We don't execute well once we're down. All right, or once we're up. Right, we start making a different kind of silly decision. But that's not the case with the machine. It's just going to do what it's been told to do. So my goal with this system is that you just turn it on and walk away. And the reason that that's beneficial is that when you place a trade, every tick the market moves in your direction or against you is input to your emotional machinery. Every single time. So potentially hundreds per second of anxiety, joy, anxiety, joy, anxiety, 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 joy, 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 joy. All right, and by creating a system where you simply turn it on and then check at the end of the day, you reduce that to just one input. At the end of the day, you look and you see, oh, rats. I'm down $150. Or, look, I made money. That's it. Instead of this roller coaster of emotional ups and downs, it's just once. And so that's the goal. What I'm doing is I'm obsoleting myself, because the rational trader is about teaching you to deal with that issue. So that kind of looks like we're going to scratch again now. We went long there off that little turn. At scratch now. For those watching the recording, there's been another scratch or two in between. What we've been discussing is that on any given day, we actually don't care if we make money or lose money on any given day. What we care about is over the long haul, over the entire period of that contract. So for 3 months, is that profitable? That's the first consideration. The second consideration is how many days did you take a max loss, which is very much a human thing, because what you have to do as a human is turn the machine on the next day, and you're less likely to do that if you've taken a loss. Or a bigger problem, you're much more likely to start tweaking things because you look at what happened that day that you took a loss, and you decide that had you done something, had you set the system more aggressively or less aggressively, or you'd gone after different behaviors, that you would have done better, and then you tweak the system, and then you kick it off the next day, and now you're kind of back where you were before. Trading today what happened to you yesterday, and that's really not what you're after here. The idea is let the machine do what it does. Okay. All right, so here we are at the end of the day, and I had stepped away once I was down minus 75. We must have taken another trade there. took a loss of minus 125, and then the system correctly stops trading as it should if you exceed $110 or equal that. That's so that you never lose more than 155. So if you get to 105 minus, then you could take one more trade. The idea there is we're trying to manage the risk. My human-based rules are only 2 trades, so $100. But with the machine, I saw that we needed more than that. Same thing for the weekly loss rules, where for just the normal human trading risk management rules, if you're down 2 days, 2 max loss days, then you stop for the week. But with the machine, you need to give it one more day. I was just a couple final thoughts here. I was talking with one of the newer members, and his basic attitude was, well, your machine learning system doesn't work because you lost money. And my response was, well, there's a lot of randomness in the market, right? And you can't eliminate that randomness. We're not even trying to do that. So here's some questions to think about. Is a poker player who gives up his table stakes because he folds a bad player because he was dealt a poor hand? Is a baseball team that loses more than 50 games in a season a bad team? In fact, both the Houston Astros and the Dodgers, the 2 teams that played for the championship, lost more than 50 games. So it's not about, and the reason I use baseball is baseball as a sport is one of the few that has a fairly large amount of randomness in it compared to, like, say, tennis or basketball. The point is, it's not about a single trade or a single session or a single day. It's about the long haul. So on Thursday, I have some data actually to show about what the sort of the internal simulations for profitability show for the machine learning system that I use to develop the models. And then the associated, pay no attention to the piano practice, and then the associated relationship between the max loss days and the volatility. So there's a very clear correlation there. It's clearly worth it to me to take that extra risk because I see a lot of potential with the volatility, with using the machine learning system. I would never consider doing it as a human, but I'm perfectly willing to let the machines trade away here.